Hi everyone, I'm just making a quick video today. I'm going to talk about two stocks that long-term investors should definitely have in their portfolios. Alright, so welcome to G-Metric Stock Analytics, where I use data to help you make wise financial decisions. Please subscribe if that sounds useful to you. And before I get started, this video is for educational and informational purposes only. I am not a financial advisor, and this is not financial advice. All data shown reflects my own analysis and opinions, not recommendations. Investing always involves risk. All right, so let's do this quickly. I've got two stocks in front of us here that I think are really great for long-term investments. At least that's what my dashboard and data is telling us. So I'm going to walk through it quickly again. So I have my marker here. It's General Electric, you can see in front of you, and Howmet Aerospace. I'm going to walk through this dashboard quickly, and then I have my 4 quadrants, a very useful matrix that I've created up to kind of like give you an idea of where stocks are lying. So we have our threshold outperformance index here. Like, are they winning more than they need to have a positive trend? And you see, yes, the ratio here is 1.1, and for Howmet, it's 1.12. Stability score, we're just looking at days above a 3% change and days below a minus 3% change. So how often is the stock price varying inside that window? We got about 5.4% above and 4.3% below here, 6% above and 4.7% below here. Very similar, but GE is coming out on top here. I'll just escape out of that, get back into my marker. Then we have our positive trend persistence index. So that's 5-day winning streaks over this time frame. I didn't talk about that at first. So from January 1st, 2021 to August 5th, 2025. And over that period, GE had 25 5-day winning streaks and 10 5-day losing streaks. And Howmet had 18 5-day winning streaks and 8 5-day losing streaks. And General Electric was slightly better there. And then finally, my metrics here, my metric down here for trend quality index. Basically, I'm plotting the threshold outperformance index over a 51-day rolling average. And then using the standard deviation of that data against a trend line, I assess the quality. GE's quality is 0.914. Howmet's is 0.974, which is about as high as you're going to see in my metric for any stock out there. Let's get out of there. And then we look at price per earnings. General Electric's 38.8. Howmet's at 66. Industry average. They're both in the same industry. 31.7. I'm going to have to cough here for a second. And yeah, 31.7 over here. And their annual rate of return, General Electric has 42.1% annual rate of return, and Howmet Aerospace has 54.5% annual rate of return. These are both great stocks. They're not going to give you a heart attack. They have been growing steadily over time. You know, who knows if this will change, but they've set a good trend here over the last 5 years. Now I want to show you my quadrants. So we're going to go over here. I've plotted both of these on my quadrants. So you can see them up here. Oh, let me get out of here for a second. There. Start again. You see CGE up here and Howmet right here. So basically, let me tell you about my 4 quadrants here. So I plotted against 2 metrics. I have my trend quality, which is basically that last number I told you there, where Howmet had 0.974. Like according to its 51-day rolling average of how often it's winning more than it needs to have a positive trend. And then on the left-hand side is something I call comfortability. This is kind of like the psychological aspect of owning a stock. Is it going to give you a heart attack? Is it going to be hard to hold on to? Are you going to be watching it all the time? Is it going to give you anxiety? Or is it something you're going to buy and you're going to enjoy watching how it performs every day because it never really freaks out and tends to always grow a little bit more than it's going down, does well against the market, those types of things. And so the comfortability one has combined my metric of stability, those plus or minus 3% days, and it has combined it with those positive trend persistence, the 5-day winning streaks and the 5-day losing streaks. I've done some statistical not analysis, but I've worked the data a little bit so it spreads out across this graph, because sometimes the stats tend to all group in one quadrant. So you can do something like you take the square root, or you square it, and therefore it spreads out the data a little bit more. There's other things you can do as well, but basically this is what I've done. And so I've created these 4 different zones. I call these the top tier up here. Comfortable, meh. That means that, the quality's not good, but it's a very comfortable stock. It's not freaking out. Slow bleeders mean it's a low quality, but there's not a lot of variety, so it's not giving you a heart attack. It's just never going where you want it to. Bumpy decay means, this stock has a little more action than you'd like, and the trend is no good. Down here, no, just no. It's just none of my metrics are pointing to this stock being a good investment. Anxiety zone here is that your trend is getting a little bit better, but the comfortability is way low. So it's having a lot of volatility on a day-to-day basis. Fragile winners over here, you've got some great trends happening, but it is jumping all over the place, and it may give you a heart attack, and it may be hard for the average investor to hold on to and believe that it's going to be okay. And up here we have pay attention. That the trend is good, but there's a little bit of volatility. You've got to watch where this stock is going. And so up here, this is where GE and Howmet Aerospace are. These are great stocks. They have been for the last 5 years. Like I say, you can't guarantee what happens in the future, but everyone kind of knows that. These are 2 that are good to have in your portfolio and you can count on. At least that's what the history says. All right, so that's our quick video for today. I need to reiterate at the end, again, that nothing in this video constitutes financial advice. I am not a registered financial advisor. Any stocks or metrics discussed are presented for educational purposes only and reflect my personal framework at a point in time. Please do your own research and consult a qualified professional before making important investment decisions. All right. So I just want to thank you for watching today, and I hope I'll see you again some other time in the future.